I'm Antoine Guerra here in Omaha, Nebraska. I'm with Whitney Tilson of Kase Capital. What was your biggest, impression of the meeting today?
All right, well, I've come to the last 15 of these, and I guess the most noteworthy thing was twofold. One is these guys are now 15 years older than they were, but mentally, they're absolutely never been better. It's astonishing to see a guy almost 90, Munger, and an 82-year-old Buffett, just so mentally quick. They're getting better with age. Now, eventually that will, I've been saying for years, eventually that will change, but it hasn't so far. So that was great to see, as Berkshire Hathaway is one of my largest holdings in the funds I manage. And then the second noteworthy thing for me, again, as a Berkshire shareholder, I was really focused on what they had to say about Berkshire's operating businesses. And they were more effusive about how incredibly well their main businesses, from Burlington Northern to ISCAR to Geico. Buffett put up data about just how astonishingly well these businesses are doing. So, the stock keeps running up, hit an all-time high on Friday, but the intrinsic value is moving up as well, so I'm still not selling.
Did you come with any big question that didn't get answered at the meeting? I know the question of CEO succession still hangs over.
Right.
It wasn't answered in this meeting.
Never will be.
People didn't expect it, but
right.
Any other big questions that you came here with?
I don't recall questions about some of the businesses like NetJets and so forth that have been asked in previous years, but I think they talked about the major operating businesses. And just their general view of the world. They're not enthusiastic about the general investing environment out there because, look, the major indices are hitting all-time highs right now, and they tend to like to buy when things are cheap. But as the Heinz deal shows, they're still willing to, do big deals. But it's one of those times you can be clear. They're saying two things to shareholders. One, we're pinching ourselves at how astonishingly well what we own is doing. On the other hand, don't have great expectations that this is a super attractive environment for us to be putting all this cash we're sitting on, and every month it's going up by $1 billion a month. Yeah. So they're trying to dampen expectations for them being able to pull some big rabbits out of the hat. But every time they dampen expectations, they seem to pull a Heinz out of the hat every year or so.
We didn't hear the word elephant gun.
Right.
What did you make of that?
It's just probably an oversight because he still has an elephant gun out. He is still looking for mega deals to do. He's got over $30 billion of short-term instruments, bonds. Add the cash, it's close to $75 billion of cash. And he says we need to keep $20 billion just to be rock solid in case there's a big insurance claim or a big hurricane or something. So he's got $55 billion of liquidity, and boy, that's an elephant gun if I've ever seen one.
So overall grade of the meeting, what did you think? A good meeting, mixed, or a bad meeting? What was your overall grade?
I'd give it a B+, A-. I thought it was a very good meeting. I mean, it's hard to complain with the stock doing so well, the business doing so well. Berkshire Hathaway shareholders are pretty happy bunch right now. I thought it was an interesting twist inviting, to my knowledge, they are the only country in the history of the universe to have ever invited someone who was short their stock to come on stage and ask the toughest questions of management, and that sort of, livened things up a bit as well.
How did Doug Kase do, in your opinion?
I think it's hard to come up with real gotcha questions when Berkshire is such an incredible company and Buffett and Munger are such exemplars as managers of it and so forth. But I think he asked a lot of the questions that the skeptics do ask about, what happens after you're no longer running at Warren, and aren't you just too big to generate really great returns going forward, and so forth. And I thought the most interesting pushback was when he said, look, over the last 5 years, because you're so big, your investment standards have sort of gone down and you're being forced to pay up for things. And Buffett pushed back and said, gee, when I look at the things we bought over the last 5 years, I'm thrilled, and I think we paid great prices, and history is proving that. So he did not admit that he's lowering his standards at all. He's finding great things to do.
So it sounds like nothing changed your mind on Berkshire shares. You're still just as optimistic as you were when you saw earnings on Friday.
I'm now more optimistic, more comfortable incrementally than I was before. Look, this is a very large position. It's approximately a 10% position in the funds I run. And the stocks run up a lot. And normally, you know, my discipline is to trim, to sell positions down, not as attractive with the stock up. But with when I recalculated intrinsic value with the latest numbers released on Friday, my estimate of intrinsic value for the A shares has moved up to about $193,000, $194,000 per A share. Stock's at 163, so it's about a 15% discount to intrinsic value, but I think intrinsic value is growing easily 8%, maybe as much as 12% a year. So I'm now more comfortable holding a very large position than I was yesterday.
Thanks, Whitney.
All right. Thank you.